Good morning and welcome to GrainTV for August 14th, 2012. To my left is Logan Burgess and I'm Brock. The grains are slightly negative here after the pit session opened. They're positive in the overnight session. Logan, what's going on?
That's right, Brock. Well, we did see grains trade up across the board here in the overnight, though. We have seen corn and wheat both back off here in the early going. As we can see here on Fire Tip, we're looking at September delivered corn trading down a half a cent here. New crop corn down half a cent. That old crop bean contract still hanging into the black here, up 2 cents. If we look at new crop beans, down 1 1/4. We have wheat in Chicago trading down 4 1/4, and Kansas City wheat down 5 3/4 there. You know, it looks like the soybean complex has been supported a little bit this morning by some data out from the National Oilseed Processors Association. Let's take a look there and see what they released today. As you can see here, the crushings and the meal exports were both improvements from what we saw during the June period. As you can see here, in July, 137 million bushels of soybeans going to crushing facilities. And as you can see in the bottom row here, meal exports remain strong here. 653,000 tons there exported in July. Now, this is very important to keep an eye on as demand destruction becomes an issue. If we kind of look at the chart landscape of this period, right here, the first period, if we look at the between these two blue lines, this is the June period. We traded a range of $13 to $14.50. During the July period, we actually traded a range of $14.50 to $17.30. So it's going to be very important here to keep an eye on these meal export figures and crushings as soybean prices remain very high right now. But it looks to be in a good stead right now. We're going to have to keep an eye on that. Pushing this market higher was deteriorating crop conditions. Yesterday we did get the crop conditions report, Brock. What are we seeing there?
You know, I think right after that report came out, we did see the market move a little bit higher as the overnight session opened. But what changed from last week was not a significant number, actually. The market was kind of looking for about an unchanged good to excellent rating for corn. That's exactly what we saw, staying at 23% good to excellent. Soybeans actually got an increase of 1% on the good to excellent rating. I think some of that is due to the rain that we saw move through the Midwest over the last week or so. And spring wheat actually fell off about 2%, but that's becoming less of a factor as we're moving pretty quickly through the harvest for spring wheat. If you take a look at where the national corn good to excellent rating is in comparison to the poor to very poor conditions, you can see the yellow line here is the good to excellent rating. We've seen fall drastically over the entire growing period this summer, and we've seen it stabilize over the last couple of weeks right around that 23% like we were saying earlier. The poor to very poor condition ratings, the red line here has moved up sharply over the last several weeks, but we're starting to see it stabilize right around that 50% poor to very poor area, and the blue line here is where we were last year on the good to excellent rating. So you can see the poor to very poor conditions ratings are a significant number compared to where we were last year on the poor to very poor. If you take a look at where we are in the process of the plant maturation, you can actually see that we're about 78% in the doughing phase of this crop. So the rain that we are experiencing across the Midwest is actually going to help some of that grain filling. So I believe that's going to actually put a little bit of pressure on this market that we have seen deteriorate drastically. But that's something we will have to keep our eyes on moving forward. As far as the denting progress, we're about 42% dented, which is quite a bit ahead of where we were last year at this time, and well ahead of where we should be on average for this time of the year. So these are, you know, we've known this all year long. We planted it early. We're growing it a lot quicker than we should be. So we're going to be harvesting quite a bit earlier as well. So, you know, that's something to keep attention to as we move forward here.
Yeah, certainly we'll have to keep an eye on the production side of things and also the demand side of things. And here on GrainTV, we'll keep you posted on both fronts there. I think this kind of wraps up our show here for Tuesday morning on GrainTV. Thanks a lot for joining us. We'll see you tomorrow.